the whole day passes like a blur. The news just whizzes past. And you're trying
Hi, thanks so much for joining in. Happy Monday to you. And this is Ask Profit. My name is Alex Matthew. With me is Mahima Vashrajani. And we will take you through the next 1 hour of trade. This show is geared towards getting you answers to all of your stock-related questions. And so to that end, the numbers that you see flashing on your screen, you can either call the landline or you can send us a message on the WhatsApp number. And both of us will take it over the course of the next 1 hour. Let's take a look at where the markets are right now and just more or less range bound once again. And we are at the low point of the day. Apologies. Down about 0.4% for the Nifty 50, but the broader markets are looking sanguine. In fact, you have gains of about 0.4% or thereabouts for, or 0.3% for the mid-cap index, about that same amount gaining for the small cap index as well, as a result of which the market breadth is looking reasonably good at the start of the new trading week. But of course, the global scenario is a little bit cautious, a little bit tentative, because you have a lot of major macroeconomic information that will come through. You have monetary policy decisions that will come through over the course of the week. Among them, of course, is the decision by the US Federal Reserve, which will come through on Wednesday. There is expected to be another rate cut before the end of the end of the year and heading into the new year, possibly the last rate cut of the year. That is likely going to have a bearing on global equity markets over the course of the week. Of course, the positive that you can take from Friday's session is that, Mahima, we turned quite sharply towards the end of the session.
Absolutely.
And you saw buying by foreign institutional investors. Right. I don't know if that's going to continue today, though.
Yeah, absolutely. I mean, we're seeing a lot of gains in some of the counters, and this might not be FIs buying, but certainly some positive news that's playing out well for these stocks. Some of them, let's pull up Dixon and see how it's doing in trade today. It's up about 4% after the pact with Vivo. They'll be holding 51%. Swiggy entering into the event ticketing business just a month after Zomato launched their district app. So another stock that's doing very well. Some counters doing very well on the back of order wins is HG Infra. Let's pull up that. It has received a letter of acceptance from NHAI of around 862 odd crores, up 3%. Afcon's Infra is also doing well. It's received LOA of for a rail project, metro rail project of around 1,000 odd crores. The stock is doing very well, up around 4.7%. Happy Forgings has also secured an order for supply of crankshafts, and let's pull up that stock. The stock is not doing very well in trade today. It's down around 0.22%, but it did open in the positive, but now trading in the negative. So some of these counters and two more counters that are locked in upper circuit, that is Sky Gold as well as one more stock that is seeing a bonus, PC Jeweler. There you go. Sky Gold is bonus up locked in upper circuit, and PC Jeweler is a stock split, which is also locked in upper circuit. So all of these counters, faring out well in trade today.
Yeah, absolutely. And that Swiggy update is quite interesting, and lots of order wins, as we pointed out also. Now, let's jump into the questions. We've got our experts joining in. We've got Saurabh Jain, who's Equity Head Research, SMC Global Securities, and we've got Amardev Singh, who is the Senior Vice President Research at Angel One. Thank you so much, gentlemen, for taking the time, and good morning. Happy Monday to you. Let me start with a shorter term question, and I'm coming to you, Amar, on the charts on this one. Nalco, the metal pack has been under a little bit of pressure because of news flow from China, or rather lack of it, if you can call it that. There was a buzz because there was expected to be some announcement on the fiscal side that has not come through. Okay, Amar is not getting my audio. So let me go across first to Saurabh. Saurabh, Nalco, Subramanian from Coimbatore in Tamil Nadu is bought at levels of 250, asking whether it can be bought at the current market price, 100 shares or so, in order to average the cost price.
Hi, good morning. Thank you for having me on the show. See, I'll suggest to avoid buying further because all the metal packs is basically moves on the basis of news flow, like what China is doing, and the news was little negative. On the stimulus front, also people are waiting on the sideline to see whether what else can China do. But I think there is some disappointment. In that sense, I'll say hold on to your investment as such in the NALCO, but refrain from adding further onto it.
We have our next query that is from Muhammad Yusuf, who's from Hyderabad. He has 266 odd shares of Wipro purchased at 293 a piece, and he wants to know as to how much of an increase can we see in the next coming couple of months. Saurabh, I'll come to you for this one. Do you see an uptick in Wipro going forward?
The overall IT stocks are looking good, especially in an environment where interest rates are cooling down in the US markets. It is believed that the banks and the corporates will start spending more money on the IT sides and on the AI side also. That is why in the last 3-4 months we have seen good amount of buying in the Indian IT stocks. Thereby meaning that they'll be able to garner more businesses. And after the management rejig at the higher level, I think the investors are more confident about the future prospects of the Wipro. In the next 2-3 months, it is very hard to predict what can be the stock price. But yes, I think better to stick with it for the long term.
I believe we've got our first caller for the day. We've got G.R. Reddy who's calling us from Bengaluru. Good morning, Mr. Reddy. How can we help you today?
Yeah, good morning to you and your team. I have Gensar Technologies, 5,600 shares at 36 rupees.
Yeah.
I just want to know whether I should continue to hold or shift to maybe new gen software, something like that.
You bought it at 36 rupees a piece. When did you buy this, sir?
And this is about 10 years back.
Okay, and have you acquired it over the course of the last 10 years or is this an acquisition that you made? So 5,600 is a large quantity. Did you acquire it at once? Or
there was, I think, the split or bonus 3 years back. So it has been consistently performing except last couple of years.
Yes.
But nevertheless, I continue to hold it. Now that it is in a good price, I don't know whether I should continue or find out some other.
That is a fair question.
In IT.
Yeah, that's a fair question. Let me ask you this then, Mr. Reddy. If you're talking about 5,600 shares at 815 rupees a piece or thereabouts, is this a considerable portion of your portfolio or is this a small portion?
I don't say considerable. It's about 10% of my portfolio.
Fantastic. Okay. And do you have any other IT companies?
I have L&T Mindtree.
Okay.
HCL Tech.
Understood. Okay, so let me go across to Saurabh. Saurabh, you've got the context. He's making quite a bit of money. I think now more than anything else, he's going to be worried about capital gains tax rather than anything else, because the kind of gains that he's had over a period of 10 years have been absolutely phenomenal. The question is, will it continue to give him the kind of returns that he's gotten over the last decade, or shall he move to something else?
See, in my opinion, IT pack per se is looking good because he is holding 3 stocks in the IT. What he just now said, like HCL Tech, LTI, Mindtree, and Zensar Technology. Now, coming to the Zensar Technology, it is run by a P player. And this is a well-managed company. And if you look at the numbers, the margins are improving, the business is improving. And above all, the valuations are quite comforting. I mean, the stock is trading about 4-5 times to book value, approximately 28-30 times to its trailing earnings. If you compare with the name he himself suggested, New Gen Technology, I think the market caps of both the stocks are same, but on the valuation side, New Gen Technology offers much less comfort than the Zensar Technology. I am expecting that the Zensar Technology will do good in the next ensuing quarters. So, in my opinion, if he is not in a hurry and moreover it makes up 10% of his portfolio, so he can hold on to it, or maybe he can decide to trim about 40-50% of the holding.
All right, that's the view coming in on Zensar Tech. Hold if you can, Mr. Reddy, is the view that Saurabh has. Moving on to our next query, Kotresh from Bengaluru is writing in. He's holding 400 IFCI shares at 63 and he wants to know whether he should keep holding them or sell them at the current levels. Amar, I'll come to you for this one. Your view as to how IFCI looks on charts.
Yeah, I would say that, first of all, good morning and thank you for having me on the show. So looking at IFCI, what we are seeing there on the charts is that it is witnessing some sort of consolidation because after making a recent high of almost 90, that was in July, last week of July, the stock corrected all the way towards 50 and currently it's back to around 65. So if you look at this stock had a very strong history. And the stock has bounced back. I would say he should continue on to holding his position. There's only one level that which he should keep a close watch on, and that is somewhere around the 68.70 level, because that's going to act as a immediate zone of resistance for the stock. If the stock is able to take out that level, then the stock is headed higher towards the 78-80 levels because the long-term trend remains strong and positive. Short-term, we are seeing some sort of consolidation. Intermediate, again, some sort of consolidation. So he should ideally hold on to his position. As far as the downside support for the stock, that's very strong support, comes at around the 60 levels.
All right. A couple of stocks that I want you to look at, Amar, and this is the pair that I'm asking you to look at is Aster DM for one and Yatharth Hospital. The reason I'm asking you to look at these two is that Ekam Baraya, who is writing in from Hyderabad, is wondering whether to sell Aster DM, which he acquired at a price of 436, and to instead put money into Yatharth Hospitals, which has already had a pretty decent run in 2024. It's up about 63 odd %. It has, of course, come off just a tad bit from the high point of the year. So is that a good strategy to employ?
So first, looking at Aster DMC, Aster DM has also witnessed a remarkable rally because from almost 300 levels currently, I would say recently, the stock had, in June, it had made a low of 300 and then again, recently the high was around 520. If we go back in time, we see that the stock had made a all-time high of 558. So from there, the stock has corrected, but the trend remaining strong and positive for the stock. Now, looking at the other stock in comparison, if I look at Yatharth, Yatharth has also witnessed a very sharp rally. So ideally, both of the stocks look good and positive on the charts. Yatharth, though, has a less piece of data from a technical perspective. What we're seeing in Yatharth is that somewhere towards the 650, 670, 680 levels, there's a lot of selling pressure that's coming in. And also, if you look at the intermediate term trend of the stock, that clearly shows that it's gone in for consolidation. So yes, what can be done is that if there is some correction in Yatharth towards 570, 580, that can be a good level for entry in the stock. And once the stock starts sustaining above the 650 mark, then one can expect a major rally. Otherwise, the stock is in for consolidation. Right. So there's not much room for change as of now.
All right, that's the view coming in on Yatharth Hospitals on charts. But, a few weeks ago when we spoke to the management also, Alex, he'd given a good EBITDA margin. In fact, even in their con call, they said that they would see a strong EBITDA margin ranging between 25 to 26% and 29% for their already matured hospital. So that was an interesting takeaway from their con call as well. But moving on, we have our next caller. Kiran from Mumbai is calling us. Kiran, thanks for calling in. Good morning. How can we help you?
Yeah, I just informed that I'm holding around 9,000 shares of GMDC, which is Gujarat Mineral Development Corporation.
Okay.
And my average purchase price is roughly around 400.
Okay.
I can hold the stock, and I wanted to know the medium to long-term perspective of holding the stock.
Okay, Kiran, 9,000 is a very significant quantity, I wanted to understand as to what was the thought process behind buying these 9,000 shares. I believe it is in staggered manner.
Yeah, it has been in a staggered manner, but I wanted to park certain funds there, and I was informed that it's a very strong fundamental company and it's developing a big coal mining asset as well. And of course, there are some special minerals also that are being explored by the company. So it holds a good promise as far as the sector is concerned.
Okay, you were informed this or this is your own research?
Yeah, I have read about it.
Okay. All right, Saurabh, I'll come to you for this one. Your view on GMDC?
It's a PSU company, first of all, and on the valuation side, it is on the comforting side. But what is happening right now is the coal prices are cooling off, and that is why the earnings, the margins, and the profitability is also cooling off, and that is the reason the stock is underperforming. It is very hard to predict when the coal prices will start moving up, and whenever they start moving up, the stock will dance to the tune. So in that sense, I'll suggest it, since it is a good company, good PSU at good reasonable price. So I'll suggest a hold.
Chitranjan Patra has got the next question, and ICICI Lombard is the next counter that we're looking at. Just pulling up the chart as we speak. He's bought it, or he's thinking of buying at the current market price, at a price of 1,970 or thereabouts, and it's up about 37% for the year 2024. Not a bad run. But the question is, would you acquire at this point, Amar?
Yeah, so looking at...
Oh, sorry, let me specify. The time frame is 3 months.
Okay. So if you look at ICICI Lombard, what we are seeing is that the stock has, I would say, corrected from almost 1800 levels and currently it's around 1970. I wouldn't recommend buying at the current levels because though the long-term trend is strong and positive, but the intermediate-term trend clearly tells me that there could be more of choppy trading happening in this particular stock, just like we are witnessing to a certain extent in the indices. So I would say that he should rather wait it out. And good levels for entry somewhere around, I would say 1800, 1820, that could be a good level for entry. And the stock would have to, for any major significant upside move, the stock would need to trade above the current levels or maybe above the 2000 level. Otherwise, the stock is in for consolidation between 1800 and 2000 on the upside.
That's the view coming in on ICICI Lombard. The next query is from Prasad from Malaysia. Before I read out his query, Alex, he's saying that we're doing a great job, and he's saying that he never misses the show in, even if his schedule is very busy. So he never misses the show. That's an important thing, and thank you so much for that, Prasad. His query is on TD Power Systems. Amar, I'll stick with you for this one. He's saying as to, what is the good level of entry for this particular counter?
Yeah, I would say if you look at TD Power Systems, this stock has really been on a roll because if we go back and see the stock has been a multi-bagger up by almost more than 20x over the last 4 years, and it's not showing any signs of correction. It did correct over the last a few weeks, means in the week of October and November, the stock had made a low of around 367 and then again has bounced back. So ideally, it's quite difficult to enter a stock which is not correcting and not giving an opportunity because the stock is trading at record highs and some of the technical indicators from a long-term perspective, they are in overheated territory, but they have been in overheated territory for quite many months. So having said that, I would say this is one stock one can definitely look on buying at correction. Ideally, a good level for entry somewhere around 400 odd levels, but not at the current levels.
Quite a few of them. There's a little bit of fatigue creeping in. Kavita from Chennai is calling us to talk about NTPC Green, I believe. Kavita, good morning. How can we help you today? Please go ahead, Kavita.
Yeah, I bought NTPC at 118
on
the day of listing, but still I have 200 shares. I'm still holding it. Should I hold or I should sell it and go for another stock?
Okay.
Can you just suggest me?
Understood. So you subscribed to the IPO, is that right?
Yes, sir.
Okay.
So on the day of listing, I bought it.
Okay, understood. And when you bought it, Kavita, is this based on certain advice that somebody gave you? Is this because you read about the company?
No, already I read about NTPC Green. That is basically on the solar system and the demand of the silver. So all are, even Suzlon is coming up with so many projects. So NTPC Green is also related to something like that. So just I got into that, sir.
And you're holding Suzlon as well, Kavita?
Yeah, I'm holding, sir.
Okay, understood. So basically you want to know in the same space whether or not to continue to invest more into NTC APC Green, or is there a better opportunity? Is that right?
Yes, sir.
Okay.
Should I hold or I should go for some other stock because already I'm holding Suzlon?
Yeah.
So is it in the same category? Should I hold this NTPC Green also, or I should go to some other stock, or it's the right time to sell?
Yeah.
Because it went up to 155 something high.
Yeah.
That time I didn't sell, but now it has come down.
But are you in any rush to sell? Would you?
No, I'm not in a rush. No, I would like to know, should I still hold the stock or I should sell?
Okay, fantastic. Saurabh, on the fundamentals, I'll come to you on this one because I think what she's trying to play is the renewable theme. And so from that perspective, she's got a couple of counters. As you've heard, NTPC Green, Suzlon, 200 shares bought at 118, comfortable gains. Should she hold on?
From the statements, looks that she looks at the price movement very closely. So from her statement, it looks like she looks at the price movement very closely. So in that sense, I'll suggest because NTPC is anyway pricey one. On the valuation sides, it is on the higher side, 13 times to book value. So in my opinion, I think she should book some profits and continue to hold Suzlon. With regards to the switch over, so I can suggest that maybe she can buy some hotel stocks like Lemon Tree or maybe PSU banks like Bank of Baroda.
Right. We have our next caller, Devashish Ghosh is calling in from Kolkata. Devashish, good morning. How can we help you?
Good morning, ma'am. I want to purchase Hyundai.
Okay.
For the 3 years.
3 years, okay.
For the 3 years.
Okay, so you want a fundamental view?
It is large cap.
Yeah.
But
Okay.
what is the gain for 3 years?
For 3 years, okay. Saurabh, I'll come to you for this one quickly. Hyundai Motors for 3 years?
See, while on the valuation sides, it is on the comforting side, but yes, all the automobile four-wheeler industries is reeling under pressure. I mean, there is hardly any kind of volume growth. Earlier, it was perceived that there would be a higher single-digit volume growth, but from the first half, now it looks that there would be a sub 5% kind of a growth. So in that sense, when the demand is not good, I don't think Hyundai or maybe Maruti can do wonders from this investment point of view in the stocks. So I'll suggest wait for some time. Then maybe you'll get better levels in the days to come.
Sneha is also calling us from Bengaluru. Hi, Sneha. How can you? What would you like to know about today?
Hello, sir. Good morning.
Good morning.
Actually, I have 500 shares of Coal India.
Okay.
And I wanted to add some more shares to that. So, is it the right time to buy that now?
Okay. So, this is a trading idea that you have, and what level did you buy at, Sneha?
Actually, 450.
450. So, you bought it slightly elevated level. Yeah.
For 1 year.
Okay, and you're wondering whether to buy more, or is there another stock that you can get into for a 1 year time frame? Got it.
Yeah.
Okay.
Yeah.
Amar, I'll come to you on the charts. Coal India bought at slightly elevated levels, given up a little bit of ground. Would you hold on to this, or would you shift that out and make incremental deployment in something else for a period of 1 year?
Yeah, I would say looking at Coal India, we've seen some very sharp correction from almost 550 levels to currently around 400 odd levels. I wouldn't ask her to move out of the stock because the stock is actually trying to form a bottom. So somewhere around the current levels. So if it is able to, there's only one level I would speak about, and that is somewhere around the 440 odd level. That's 430. 430 is a very crucial resistance zone for the stock on the upside. And it seems that the stock is inching towards some sort of pullback after the sharp correction. So if it's able to sustain above the 430 levels, then we could say that the stock has the potential to rally towards 450, 460 odd levels, where she can, if she wants, she can move out, because what's happening on the intermediate term charts for Coal India is that the intermediate term trend is very negative. So effectively, it means that any pullback will be sold into, or some sort of selling pressure will come at higher levels. So from that perspective, she can move. she can move out. And also, if she wants to look at stocks, she can look at new digital stocks like Swiggy also, or Zomato for that matter, if there is any correction from a longer term perspective.
Right, that's the view coming in on Coal India. But with that, it's time for a short break. We'll take more stock queries on the other side. So viewers, Saurabh as well as Amar, don't go anywhere.
Do you think the future remains EV, or is it hybrid, CNG, or something else altogether?
See, first, I think EVs were hyped up as if it was a panacea and it would solve all problems.
How do you see the current state of the Indian economy?
The last couple of quarters, we have seen a slowdown in the economy. There's a vested interest in maintaining red tape because obviously it provides opportunities for rent seeking.
What was your equation with Mr. Ratan Tata?
He was a man with the power of mind and the goodness of heart.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the large street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the large street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the large street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and
Hi, welcome back. You're watching Ask Profit. This is a show where we get all of your stock-related questions answered. Just a quick mark of how the markets are right now. And we've got cuts of about 0.5%, more or less, where we started for the benchmark Nifty 50. Where, actually, we've come back. With cuts of only about 0.25%. And you pulled up 200. You confused me. Pull up the Nifty 50. See? This is, I was wondering how my screen was showing me something else. Cuts of about 0.5% for the Nifty 50. And the broader markets looking sanguine, gains of about 0.33% each for the mid-cap and the small-cap index. All right, let's take the next question. And in fact, this one is on Exide Industries. And Naresh Shetty from Mumbai is asking about this. Bought 500 shares at a price of 478 rupees per share and wondering whether to add more at the current juncture. Amar, on the charts, how does it look?
I would say that Exide Industries clearly is in for consolidation because, again, it has a similar pattern wherein the intermediate term trend continues to remain bearish. But we are seeing that there is some sort of support for the stock coming around the 425, 430 odd level, whereas resistance is around the 470. So ideally, he can hold on to his position. Once the stock starts sustaining with the 470 mark, then the stock could witness a rally towards the 520 odd levels. Otherwise, the stock could consolidate between, I would say, 420 on the downside and 470 on the upside.
All right, the next query is on Sapphire Foods, and this is coming in from Chandra Prabha, who's from Bengaluru. Now, she's received Sapphire Foods as a part of the ESOP plan of the company, and she wants to know as to, what the trajectory of the company looks like, because she's saying that the stock has been falling since a week, and we've seen that QSRs have not been performing very well. Saurabh, your view on Sapphire Foods?
I'm expecting QSR to do well. For example, some of these stocks are even doing well. If you look at the Jubilant Food, the Domino's, they are doing good. The numbers were good. In case of Sapphire Foods, yes, the numbers were erratic. I mean, the clear path to the growth is not visible. But yes, the space is interesting. So I suggest, since you have got in the ESOP, so I suggest wait for 1 or 2 years. You will see good numbers approaching and the stock price will do well.
But just a quick follow-up to that, if she's worried about the stock price eroding and if she wants to move out, considering that it's an ESOP and she is looking for opportunities, should she move to something else, Saurabh?
See, I can only say about the space. The space is looking good to me. If she's worried about the price points, then maybe technical guy can be of help.
Very quick view then on the charts. Amar, do you have enough information and enough data to talk about the price trends for Sapphire?
Yeah, so if I look at Sapphire, what we are seeing here is that the stock is clearly in for consolidation and higher levels are being sold into. So it has got, so it's in a range right now and between 300 and 360. So I would suggest that whenever there's a pullback towards 330, 340, 350 levels, that can be a level for exit, because till the time the stock doesn't reach the 360 level, it could be in for consolidation, and the long-term charts definitely have weakened. Intermediate term trend, we are seeing a lack of momentum. On the downside, the stock is supported on the 300. So 300, 360 is the zone. Higher levels, one should look at least part booking.
Okay, all right. So that's the price trend that you'd like to know about. We've got the next caller. It's Alex calling. Alex, good morning, Alex. How can we help you today?
Good morning, Alex. I'm calling it for second time.
Yes, I'm glad. How can we help you today?
Today I want to talk about India Mesh, India Mart Indamesh.
Okay. Why do you like this company, Alex?
Because it's in B2B business, and when you look at the competitors, Zomato, this one, Swiggy, this Paytm, this one didn't move for last 5 years, and the valuations also I am looking, it's interesting. And if from the current level it moves to its all-time high of near to 5,000, that itself almost 100% gain.
Okay, but have you acquired the stock yet?
No, I am looking for a fresh entry from the current level.
Okay, just a quick qualification, these are the companies that you mentioned as competitors are not exactly competitors. It's a different entity altogether. So perhaps that's not a comparison that you might want to draw. But that's my own interpretation.
I am in this one technology-driven companies.
Understood. Okay, good. Let me take your question to our fundamental expert, Saurabh. Then IndiaMart Intermesh. What are the prospects according to you from a business perspective, and would you buy this company for the long term?
Yeah, I think the most worrying part that investors have, because of which the investors have sold this stock, is that the company is not able to retain their customer for the long term. It is the shorter term contracts and the variations which are coming in between that probably the investors are not liking it. The companies are not able to stick with their customer for the long term and get the long term subscription. So in that case, what happens is that it is very difficult to project the future earnings, and the earning visibility is very hard to judge. So in my opinion, I think it's a void.
Right, it's an avoid for IndiaMart. The next question is from Rajashekar, who's from Bengaluru. He's holding 1350 shares of Supreme Industries, bought at 262 a piece. If you can pull up the chart and see at what levels it is trading at. And he wants to know as to he should keep holding it or should he sell it. The stock is currently at 4870. So he's sitting on a significant amount of profit, I believe. Amar, quickly I'll come to you on this one. Is there further upside to this one or should he book profits?
So if you look at the stock Supreme Industries, what we are seeing is that some sort of consolidation. So I would definitely recommend that he should look at booking some profits around the current levels, because till the time the stock doesn't take out the 5100 level on the upside, the stock is clearly in for consolidation, whereas on the downside, the stock has got good support coming on the 4500 levels. So ideally at the current levels, he should look at booking part profit and hold on to the remaining position only above 5100. Can he expect some major upside rally towards 5300, 5400 levels? Otherwise, the stock could consolidate with a downside support of 4500.
Okay. Srinivas from Bengaluru has got the next question. He's broadly asking about a number of banks. He's wondering which to enter. He's named a few: PNB, Can Bank, IOB as options. Saurabh, which of these do you like for a period of 3 to 4 years?
I think in the priority order, if I would recommend is, first I would recommend Indian Bank, then maybe Bank of Baroda, then Canara Bank, and then maybe Union Bank.
All right, so that's the order of banks which Saurabh likes. Moving on, we have our next caller. Arun from Chennai is calling us. Arun, thanks for calling in. How can we help you?
Hello?
Yeah, I can hear you, Arun.
Yes. I am holding under shares of HDFC Bank.
Okay.
Whether I have to sell it or hold it.
Okay, and believe you bought it for 1600 a piece? That's the levels at which you bought the share?
Correct.
Okay, and how long ago did you buy this?
Maybe around 1 year.
And how long do you intend to keep holding the share?
No, I don't mind. If it is really useful, I can keep how far you want. No problem. I want to know whether I should sell, book a profit or hold for to get more profit.
For longer term. Okay, Saurabh, quickly, your view on HDFC Bank? Where does this rank?
My view will remain positive. I think things will turn for sure. The growth which is languishing because of the management decision will follow after the next 2-3 quarters. So things will be in good shape. The balance sheet is already in good space, and I like the bank. I think he must stay for the long term. It's a kind of a portfolio stock.
And it's recovered quite considerably from the levels that Arun bought it at. 1600 levels are a great price. I think a lot of institutional investors will be quite jealous of the acquisition price, Arun, that you have, and you had the gumption to buy at that point and you've been rewarded for it. Congratulations. The next question that we've got is on Zen Technology. We've got Nina Johnson, who bought at levels of 706, 35 shares, and wondering whether to book profits at this juncture. She's pointed out that she has gains of over 50,000 rupees at this point, and she's wondering whether to book out. The stock is up as much as 5.2% in trade today. Amar, on the charts, is this a good idea?
I would say that, this stock has been on a, I would say, one side way. There's, I would say, defying all laws of gravity. And if you look at the charts, on the long-term perspective continues to be very strong from a short-term perspective also. And what we're seeing is the volumes have increased significantly over the past 8 to 10 trading sessions. So that clearly tells me that the stock is in for some more upside, but it's trading in uncharted territory. So I would say that she should rather keep a, I would say, a trailing stop loss. Currently, it's around 2280. So ideally, a stop loss needs to be below the 2000 level. If our buying price is below that level, then hold on to the stock. And exit can be looked at around the 2350, 2400 levels.
All right. The next query is from Haresh Thakur, who is from Mumbai. He has two queries. First of all, I'll take his Cafe Coffee Day query. He was holding 500 shares at 35 for some time back, and he does not find any trades. Haresh, you're not able to find any trades. This is because the company is now unlisted, and I don't think these shares can be traded anymore. So that's one. Second, his query is on Renuka Sugars. If I'm reading the number correctly, he's bought 1,40,000 shares at 8 per share, and he's already taken off the capital and booked profits with respect to his capital in the past, and he wants to know as to what the long-term view is with respect to this for the next 5 years, considering the ethanol story. The stock is currently at 42. He bought it at 8. Saurabh, what do you think?
See, with regards to Cafe Coffee Day, you can contact the company's registrar and maybe he can give you any option to exit from the company side. With respect to the Sri Renuka Sugar, I think it is very difficult to predict what lies in the 5 years ahead. But yes, ethanol story stands tall. Whenever the government revises prices of ethanol procurement, the company stands to gain. And right now, but what is happening is that they are losing on the sugars and both on the ethanol side. I mean, the margins are cooling off on the ethanol and they are losing some kind of a money on the sugar side. That is why the stock is not performing. Since you have taken money off the table, your investment amount I'm talking about. So I think it's one of the biggest player in the industry. So I think you should stick with it.
Stick with it is a view on the question. We've got a next question calling, and we've got a caller. Rahul is calling us from Surat. Morning, Rahul. How can we help you today?
Actually, I have purchased this year at the rate of 694.
Which stock?
So, Supriya Life Science.
Okay.
So I want to know, should I sell or hold?
Okay,
right now?
Rahul, is this a trading strategy that you're looking for?
Oh, short-term profit.
Short-term profit. All right. So the stock is currently at 723. You bought it at 694. What is the outside limit of how long you can hold it for?
6 to 8 months.
6 to 8 months.
Profit on 1 month, 1 year on.
Maximum 1 year, is that right?
Yeah.
Okay. Amar, on the charts for a maximum of 1 year, what is the kind of price target that you would keep in mind?
I would say, see, the stock has already witnessed a significant rally, and if you look at the stocks, I would say quarterly earnings also for the September quarter, that was around 166 crore sales, and profit was around 46 crores. So the company is moving towards higher profits, but the stock PE is around 36, 37, and also compared to it's the industry average. As far as the stock has rallied significantly, it's more than doubled from the recent lows of 300 odd levels in July, 350, and currently it's around 725. So I would say he should definitely book part profit. And if he wants to re-enter, then the re-entry level for the stock is somewhere around the 690, 700 odd levels. That can be a level from where the stock could witness a pullback, because the long-term trend still remains strong and positive for the stock, but upside seems to be capped around the 800 levels.
All right, that's the view coming in on Supriya Life Sciences. The next query is from Lalita, who's from Dubai. She's also written that it's a wonderful program you telecast every day from 10:30 for an hour, and she does not miss a single one, Alex. So thank you so much for that, Lalita. And her query is on Hindustan Copper. She's holding around 1,000 shares, bought at 128 a piece. Should she keep holding it from a longer term perspective or sell it? She's sitting on a profit of around 1 lakh rupees. Saurabh, do you think she should keep holding it?
I think the story hinges upon how the global climate pans out, how the China economy does, and what kind of buying they are doing, what kind of stimulus they are talking about, and what they do. So I think the stock prices are languishing for the major part of the year right now. It's on the lower side from the highs. I expect if you want to hold for the long term, I think the future looks good. But at the same time, in the short term, I don't think so. Anything can any positive can happen. So you have to have if you are having a short term outlook, I'll suggest an exit. If you have long term outlook, then stay put.
All right. And watch for any news that comes in from overseas, from India's neighbor, China. Any prospects on the growth there will affect the metal counters. They're down in trade today. The last I checked, the metal index was down about 1% or so. It was one of the worst performers. Let's pull up the metal index if we possibly can and see where it is. Yeah, so there you go. It continues to languish in trade today, down about 1% or so. The next question is coming from Pramod, and he's writing in from Thrissur in Kerala, asking about Lemon Tree. And Saurabh, this is a counter that you said that you liked. He's bought at levels of 120, so he's in the green right now. The stock is currently trading at 150, so he's making a profit. He's wondering whether to hold for the next 3 to 5 years. Should he add more?
See, I mean, if you look at the fundamentals of the hotel industry, the supply is less, the demand is more, the average room rent are moving up, the occupancy rates are moving up, and major capex from the Lemon Tree has been done. The major capex was the Mumbai hotel which they have built, and the management has guided that they would lower their debt in the next coming years or quarters. So in that sense, I think things are looking quite promising. They are doing alliances with in the newer geographies. They are expanding their footprints. It's the largest chain in the Indian market. So I expect it to do well. It's good for the next 2, 3, 4 years.
All right, that's the view coming in on Lemon Tree. We have our next caller, Bala Kumar from Bengaluru, is calling us. Bala Kumar, thanks for calling in. How can we help you?
I'm holding some shares of Aarti Industries.
Okay.
Whether to continue to hold or exit.
I believe your buying price is 35?
Yes, in 2004.
Okay, wow. So you, congratulations first of all that you've had so much patience of holding that particular share. You're sitting on a profit of 1 crore. So first of all, congratulations for that.
1.6 crore.
Yeah, that's a significant profit, Bala Kumar. So I believe you want a fundamental view on this particular counter.
Yes, I want to whether shall I hold or exit.
All right. I'm just curious as to why did you, I mean, what was the idea behind buying Aarti Industries in 2004?
Yes, see, at the time, company was paying 3 rupees 50 paise dividend. Okay. So, if I buy 1,000 shares, my dividend will be more than the bank FD rate.
Okay.
And also, I expected some capital appreciation.
All right. All right. In fact, right now also, I mean, if we see the dividend payout trajectory also, Bala Kumar, it's been good for the company. So bang on, you've made a good choice. But let's see, should you keep holding it or not? Saurabh, your view on this particular counter?
See, the company is quite good. The management is quite good. Major of the capex has been done. Now, what these chemical players are doing, they are largely focusing on their capacity utilization, regardless of the pricing. Sorry. The industry experts and many of the investors on the street are also expecting that there will be a fairly turnaround in the chemical industry trends. I mean, the pricing will turn to the positive, and so the expectation is that the things will become positive for the companies like Aarti Industries. Since you are holding for the last 20 years and you have made a lot of money and you have bet on a very good company with good credentials. So I would suggest wait for another 2, 3 years. Maybe the cycle will turn and you'll again see the prices which you saw about 2 years back. I mean 700, 800 kind of a price. So if you are not, it seems that you are not in a hurry. So I am suggesting a hold.
I mean, I'm absolutely speechless that you've actually held during a time that has been difficult for the company, and you've still gained so considerably. Because it's a dividend strategy that you've tried to employ with this counter, it's actually great that you acquired when you did, because of course for you the dividend yield is going to be significantly better than anybody who acquires right now. So congratulations, and I'm glad that this has worked for you. All right, let's take the next question, and we've got Premier Explosives. Was it in the news today on account of an order?
No, but we did have the management today, and they've given,
Yeah, so watch out for the update on the channel. There's going to be something that you should watch out for. Balachandar is asking this next question. He's wondering whether to buy 250 or 500 shares. So he's not specifically mentioned whether or not he's got a long-term or a short-term time frame. And at this juncture, if I'm not mistaken, it is at an upper circuit, so no sellers in the stock right now. Amar, when you get the opportunity, is this something that you should acquire?
Yeah, I would say if you look at Premier Explosives, what we are seeing is that the stock was in for consolidation for many weeks. And starting, I would say, from the last week of October. And recently, over the last 2 days, the stock has really taken off. And if you look at the volumes, which were there on Friday. So they were significantly higher compared to the normal average daily volume. So that really tells me that, yes, there is something definitely happening in the stock and the company. And the stock has, on the long-term charts, the stock remains strong and positive. Intermediate-term trend, we are seeing a pullback. And short-term, yes, the trend is again picking up. So yes, this is a stock. On any correction, one can look at a buying opportunity. Ideally, the good support for the stock is somewhere around the 480, 500 levels. So any pullback is a buying opportunity. On the upside, the stock would meet with resistance somewhere around the 590, 600 odd level. But yes, on corrections, this can be a stock to be looked at.
The stock is up 10% as we speak. They've entered into an MOU with Global Munition to set up a JV, and the management has also said that they expect roughly 500 crores of revenue from this JV. So interesting one to watch out for. The next query is from Nimesh, who's from New Jersey, USA, and he's bought Ramke Infra 50 shares at 300 from a long-term perspective. He's saying earlier this share had reached 1,000 levels, but he did not sell it at that point of time. Right now, so he's sitting on profits of around 17,000 odd rupees, and the stock is trading at 651. Saurabh, your view on this one?
It's a very good company, and what happens in case of our normally the activity gets speed up in the second half of the financial year after the monsoon season gets over. So I expect more awards, more orders from the government side and from the private side, and the execution will become faster. So the numbers will improve in the last 2 quarters, in the December and the March quarter. So in that sense, I think it is a hold.
Hold, all right. We've got the next question from New Zealand. This is a first. Sarun Saju is writing in asking about IDFC First Bank, which he's bought at an average price of 80 rupees per share. He's got 1,500 shares and he's asking whether to hold or to sell. He's got a long-term time frame, which he defines as 2 years. The stock has done not too well in the year so far, and the questions are whether or not the fundamentals will turn around. Saurabh, on the fundamentals, would you continue to hold? Would you add more at this current price?
The management is quite good. That is the reason I think people are backing, people are investing in the stock. And this is the most important part also. So overall, the banking sector per se is looking good to me. So in that sense, I think it makes a sense to hold for the next 2 years.
All right. The next query is from Siddharth, and he has a query on D-Mart, that is Avenue Supermarts. His average buying price is 4580 and his quantity is 30. And he says he needs the money in the next 1 year. And he wants to know the fundamentals, with respect to the fundamentals of the company. Saurabh, we've seen that H1 did not fare out well for Avenue Supermarts because there's a lot of competition coming in from quick commerce and e-commerce. But do you think that he should keep holding it for the next 1 year?
Yeah, I think there is a lot of competition, and also the demand is also cooling off. All the FMCG players are talking about the lower demand from both urban and rural season. There was expectation that because of the good monsoon, the pickup will be there in the rural India. But I think because of the inflation and all, the demand seems to be languishing also. And furthermore, to adding to it, the competition is also on the rise. The Amazon is also coming in the quick delivery. Zapto is also doing well. So a lot of competition is coming in the tier 2, tier 3 cities also, which is eroding margins. So in that sense, I think I don't expect any upside in this space. So I think it is better to avoid the space.
All right, it's time on the show to try and take as many questions over a period of 2 minutes, and this is the rapid fire round, as we'd like to call it. Let me take the first question across on the technicals on Vodafone Idea, and this is from Sudhir Thakur. Bought at 9.35 levels, significant quantity, 13,000 shares. Would you hold for a period of 1 year, Amar?
I would say that he can definitely hold on to his position. The stock needs to rally above the 8.7, 8.8 for any upside move, because the stock has corrected significantly.
Okay,
and
quick answer, Amar, quick answer. 2 minutes we've got.
Yeah, the next query is from Ankush Amritsar. He has a query on popular vehicles. 100 shares bought at 276 a piece. Saurabh, your view on this counter?
Sell.
Okay, Monarch Capital, if we can get a view on this one, bought at levels of 480. Sai Kumar is asking, should he hold for a period of 1 year? Amar, quick answer if you can.
Yes.
All right, the next query is on PC Jewelers. Long-term perspective, Saurabh?
Avoid.
Morpen Laboratories, bought at levels of 84. Sushila is asking for a target if you have one, 1,167 shares. Amar?
A target could be 100 in the short term.
Okay.
All right, Senthil is asking whether it's the right time to enter Dixon from a short-term perspective. Your view, Amar?
So if I look at Dixon is a hold.
Okay, Dixon is a hold. IREDA bought at levels of 232, 300 shares. Nikhat from Bengaluru wants to know whether it's a hold on the fundamentals. Saurabh?
Hold.
All right, Hudco is the next counter. 40 shares bought at 289. Is this the right time to hold? Amar?
Yeah, he can hold on to the stock.
Okay, KPI Green bought at levels of 630 rupees per share, 300 shares. Venkat Ramani wants to know, is it a hold or an exit? 18-month time horizon. Saurabh?
Exit.
All right, the next query is on Ashoka Buildcon. Is this the right time to enter, and what's the future outlook? Saurabh?
Not in coverage.
Not in coverage. All right. I think we've covered quite a few stocks. Gentlemen, thank you so much for taking the time. Amar, Saurabh, always a pleasure having you on the program. Viewers, we're completely out of time on this particular edition of Ask Profit. It's been an absolute pleasure bringing it to you. Thanks so much for your patience. If we didn't answer your question, it's because we ran out of time. We will endeavor to take your question tomorrow. In the meanwhile, stay tuned. Lots more coming up on NDTV Profit.
Do you think the future remains EV, or is it hybrid, CNG, or something else altogether?
See, first, I think EVs were hyped up as if it was a panacea and it would solve all problems.
How do you see the current state of the Indian economy?
The last couple of quarters, we have seen a slowdown in the economy. There's a vested interest in maintaining red tape because obviously it provides opportunities for rent seeking.
What was your equation with Mr. Ratan Tata?
He was a man with the power of mind and the goodness of heart.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable.
Hello and welcome. This is KYC, a brand new show at NDTV Profit. And in this fast-paced world of stock markets, investors are bombarded with information, but what they often lack is a deep, comprehensive understanding of the companies they invest in. KYC, Know Your Company, is a show designed to give you regular investors powerful, actionable insights into the fundamentals of a single NSE-listed company every single day. And in this edition of KYC, we take a look at Tata Technologies. Now, Tata Technologies is a company which is very recently listed on the exchanges. And well, while it is a part of the technology sector, its focus essentially has been the automotive space. Now, it is a global engineering and services company and it offers products in development and digital solutions. But besides that, as I mentioned, that it's listed just last year on December 1st, 2023. And it's, not only is this focus lies in the automotive space, but there are niches that the company has created for itself, and it essentially looks to cater to those specific areas. As far as this revenue breakup is concerned, well, a majority of it comes from the services area, about 78% in fact, and the balance 22% comes from the tech solutions, space. But with that, what we intend to usually do with all the companies that we take up on KYC is we talk about the fundamentals of the company, and based on that, we also take a look at the rating, the kind of performance it has come through. And among the parameters that we can consider, of course, is the income statement, the balance sheet. We also talk about cash flows and how things have panned out. We talk about return ratios, and among the other set of parameters that we also assess the company on, well, the shareholding will be one of them, besides street credentials, dividend payment, as well as street coverage. But for that, we also have with us my colleague Rucha, who's going to join us to give us more insight into the company going forward. So let's, get off the mark and talk about the income statement right at the top. Rucha, thanks for joining in. How have the revenues of the company grown, and how has the profitability looked like of the days?
Right, Agam. Thank you so much. I'll first start with from where Tata Technology receives its revenue. Well, majority, that is 78% of its revenue, comes from the services side, and the balance 22% comes from the technology side. Now, talking about revenue, well, the company has clocked around 5,000 crore of revenues in FY24. And if we look at the 3-year CAGR, that is compounded annual growth rate, the revenue has been growing at 21% rate. Well, talking about the EBITDA, because EBITDA is the right way to look at ER&D companies, it clocked around 940 crore of EBITDA in FY24 and 20.7% 3-year CAGR. Lastly, talking about net profits, healthy profits over here, around 25% compounded annual growth rate, as you can see see on your screens. 679 crore is the kind of profits that Tata Technologies reported in FY24. So overall, a thumbs up over here is what we could see.
Absolutely. And well, I would say a thumbs up for the balance sheet as well, because they were in a pretty stable space here. The company is debt-free, as is the case with most technology companies. The company has an equity shareholders' equity of around 81 odd crores and has net cash around nearly 15 crores in its books. This is as on September 2024, but do remember that this is halfway through the year. So naturally, these numbers will look very different towards the end of the year. But as far as the balance sheet is concerned, it's another thumbs up. But how are cash flows looking here, Rucha?
Cash flows, another thumbs up. Cash flow from operations at 86.7 crore. Free cash flows also healthy at 212 crores, but slight bit of downtick as compared to FY23 over here.
All right, and we're moving on to return ratios. We're considering just the return on capital employed, which is a healthy 28%. And, the thumb rule here is that any number over 20 to 25% is considered healthy at the moment. So that's another thumbs up when it comes to that specific return ratio. But shareholding is, well, it's not exactly most tightly held, Rucha, right?
Right. So largely Tata Motors, which is the promoter, holds around 54% of the share. Domestic institutions and foreign institutions, equal weightage over here, around 4% each. So not much of concentration from the institution over here, and balance free float at 38% is what we could see.
Right. And moving on, we talk about how the stock has done over the course of the last 1 odd year, because that's how long the stock has been listed for. And while there was a very strong listing for the stock, well, it's come off quite a bit. And well, as you can see, it's massively underperformed not only the benchmark indices, but also the sector itself. And of course, the reason here is that from here on, there is a little bit of temperance when it comes to growth. In fact, there has been no growth over the past, well, 3 to 4 quarters on a sequential basis, which is why we've seen that little bit of underperformance coming in. And as far as dividends concerned, that stands at around 10 rupees per share. Again, not the strongest here, but that's understandable because the company is still in growth phase. So I'm sure that it looks and uses a lot of its cash flows back into the investments. So I would give it a thumbs down only for the kind of returns that we've seen on the share price. But how's the street coverage looking, Rucha?
Bearish stance is what we could see based on the coverage on Bloomberg over here, with 8 sell calls and 4 buy calls and none having a hold call. Return potential largely flat at 0.4%. But let me talk about valuation also, Agam. Thumbs down over here because